Has Canada officially entered recession territory? This past week, we got the latest GDP numbers for August, and we're going to be talking a little bit today about how this year has shaped up for Canada. We'll also be talking about where Canada's GDP numbers could go next year, and more importantly, we're going to be talking about how this affects the interest rates. We know this has had an impact on every single Canadian, so we'll try and figure out where we're going in the future. For those of you who don't know me, my name's Nick and welcome to Ways to Wealth. Today's topic is all about gross domestic product, aka GDP. It's an overall sign of how Canada's economy is doing. As mentioned in the preview, we are going to be covering what the latest number was for August of 2023, and we'll jump over here to Statistics Canada to see that it was 0%. Now that's a 0% change in what last month's GDP was, meaning that Canada's GDP didn't go higher or it didn't go lower, which is definitely a cautioning sign. We always want this number to be increasing. So let's break it down a little bit more and hear what Tiff had to say. He spoke in front of the Senate this week, in front of Canada's government. Let's break down what he had to say there. The economy has entered a period of weaker growth, with growth averaging about 1% over the last year. Growth in GDP is forecasted to remain below 1% for the next several quarters before picking up in late 2024 and rising to 2.5% in 2025. So we're still predicting this soft landing. And what I mean by that, if you haven't seen my videos before, is that what the Bank of Canada has had to do to combat inflation is raise interest rates. We're at 5% right now. It's the highest that we've seen in 22 years, and they're trying to do this to make sure the inflation number comes back down to 2%. And when you raise interest rates, you make things more expensive for more people, and you try and, soften the economy without killing it completely. They are still under the perception that they can make this happen, but we're going to read a little bit more to see if this is actually true. So in this Reuters article here, I'm going to pull out something that I found very interesting, and it has all to do with projections. We just saw what the projections are for 2024 and 2025, but let's kind of rewind the clock to see what's happened in the past. And the projected contraction in the third quarter, annualized growth, is far lower than the Bank of Canada's forecast last week. The Bank of Canada forecast GDP growth would expand 0.8% in the third quarter, and that's down from the 1.5% projected in July. So we're kind of in this situation where, do we trust what Tiff had to say in front of the Canadian government? I'm kind of thinking that these estimates, these forecasts, these projections, although probably done mathematically, are probably overstated. I'm definitely in the camp of bearish. I cannot believe that we're kind of pulling out this 0% number. I honestly believe that we are in a recession today, but that doesn't mean we are in a technical recession. Let's read a little bit about what a technical recession is. So we turn here to Google to figure out what the difference is between a technical recession and a recession. So a recession is a sustained period of weak or negative growth in real GDP accompanied by a significant rise in unemployment rate. A technical recession, on the other hand, is a more specific term that refers to 2 consecutive quarters of negative growth in real GDP. So we don't know what the full outlook is for Q3 because we don't have that September number as of yet, but we do know in Q2 we did have a negative GDP. So we are heading towards a technical recession. Unemployment numbers did come out as well. We are heading higher in that sense, but let's see what some analysts are projecting for what the September number could come out as. So again, we know that final numbers for September are not yet available, but early indicators suggest the trend continued into September. That means there's a good chance that Canada's economy has not grown in any meaningful way since May. The numbers for August were worse than the 0.1 that was projected, and worse than the 0.1% uptick that the data agency had in its forecast for its preliminary estimate. We talked about how estimates could be overstated, and that definitely came true for the August report, but the estimates are that September will be negative. So the underlying connotation right now, the way that I perceive it, is that we are in a recession. Although not technical, although not confirmed, things are definitely tough out there and everybody is feeling the impact of these higher interest rates. Now, something that I found super interesting was that the former Bank of Canada Governor, Stephen Poloz, came out in the media and kind of addressed the situation in regards to the fiscal policy. That's the government spending. We talked a little bit about it in last week's video where Tiff Macklem kind of threw a shot out that the fiscal policy is going against everything he's doing with the interest rate hikes, and it all has to do with government spending. So let's read a little bit about what Stephen Poloz thinks about what the Canadian economy is going to look like in the future. Canada could have balanced the budget and reloaded its fiscal capacity. Instead, the country has been running deficits in an economy that is over capacity. That was pretty bad timing, but now the economy is, if not in recession, at least stagflationary kind of situation, probably for the next 12 to 18 months. As a result, Poloz predicted that fiscal deficits are likely to be higher due to slowing revenues. It means that they can't bring enough in tax revenue, but he said it's important that deficit comes from government spending on items that will pay off in the future. We need to look underneath and make sure we're using this deficit in this situation. We're using it in order to make an investment that will pay dividends to the economy for a long time. He believes that the spending that we're doing today is not going to pay us in the future. We can go on to read infrastructure. That's fine. That pays dividends forever. Even childcare, that pays dividends forever. But most of the other things we're doing do not pay dividends forever. So shots fired from two different parties, the current governor and the past governor. This is something that is a definite problem. Governments are spending out of control. That's leading to a lot of payments to service that debt, and we're going to eventually have to pay back that money. He believes that this will impact the Canadian economy for the next 12 to 18 months, is saying that if we're not in a recession today, it's coming, and it could lead to stagflation, where we have a stagnant economy and growing unemployment rate, which is definitely not a good sign, and remnants of what happened in the 70s and early 80s. So what does this mean for interest rates? Well, Tiff kind of alluded to it last week that they're probably done with interest rate hikes, but a lot of the economists that we have on the screen right now definitely agree with that statement. The economy appears to be close to a tipping point into a mild recession, already clearly reduces the likelihood of any further interest rate hikes. We have here that it reinforces our view that the bank will begin to cut interest rates sooner than the markets are pricing in. And this goes on and on. Basically, interest rates are probably at the highest that they'll ever be. And with the Canadian economy faltering of late, or even since May, like we pointed out before, this is definitely a tough time and definitely will continue to see tough times. Unfortunately, the bearer of bad news today, I just want to highlight that we do need to make a change on the government side. We do need to make a change with our mindset, even if that's personally watching what you're spending on, making sure that you're budgeting. I know times are tough, but when it comes down to it, we need to control spending. We need to make sure that we're protected, especially if anything bad were to happen in the next 1 to 2 years. So I hope you enjoyed this video. If you agree with me, let me know down below. If you like this type of content, we cover this stuff all the time. The Bank of Canada, the economy. I'll link some videos here that you can check out. I appreciate all of your support. I hope you all have a great week in the markets. Happy investing.